Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I really want to sort of do a sort of follow-on from yesterday's broadcast. And I want to ask the question, is this as good as it gets for the market in 2025? As well as that, I want to talk about several warnings the market should really be listening to. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yeah, I do generally want to start asking the question. I talked about this over the last couple of broadcasts, actually. And I want to talk about it again. Because I generally think that the market in many ways is got itself into a bit of a good mood over the last couple of trading sessions. But I think, when they look at it, this is potentially as good as you can get for the market, because we're not really taking into account a lot of factors. Now, there's no doubt about it. Monday brought much rejoicing. It really did. It brought much rejoicement in the market. Okay. All because really, like I say, the US and China are the slasher of tariffs, didn't they? With the US announcing that they're going to reduce China's tariffs from 145% down to 30%, and China in turn reducing the 125% tariffs on US goods down to 10%. And like I say, there was a huge amount of excitement in the market. Huge amount of excitement. And like I said, I'm going to, we'll look at it now. We'll look at it and quickly look at it now. I mean, this is what happened. This is from Monday onwards. This is the S&P 500, where obviously, the massive boost opened with a massive gap because there was pure excitement, pure joy that there were signs that this trade war is over. And the same with the Nasdaq as well. Again, opened with a large gap as well. Much rejoicement in the market. And if we have a look, both on the daily as well, you can see practically, from April the 2nd, both the S&P and the Nasdaq, that's what April the 2nd was, Liberation Day, we all remember that. It basically wiped out its losses from that day, and it ended with gains, and same with the S&P 500 as well. So again, much rejoicement for the market. And of course, as well as that, we had a lower or cooler than anticipated US CPI. Excellent. All is good. Happy days. Let's hang out the bunting. However, there is no way of avoiding inflation concerns. And if you avoid inflation concerns, it's at your peril. Because like I'm saying, yes, we had good news on Monday. And a better reading of CPI. I asked the question, and again, this is open to everybody. Everybody can come back and talk to me and tell me what they think. Are we witnessing a slow burn? A slow burn. We don't realize it yet, or the market doesn't realize it yet. Is it a slow burn we are witnessing or feeling? Because we've had some other data today, which again then makes me think about it being a slow burn. Because producer price index, again, another major indication of inflation, Month on month, it was announced negative 0.5% versus 0.2% expected. So a better figure. But this is where it starts getting sticky, in my opinion. This is where things start to show cracks. You know, we're not feeling it yet. Well, the market's not feeling it yet. Because US retail sales, though came in better than anticipated, it came in at 0.1% versus 0% expected. So slightly better than anticipated, than consensus, slightly better than consensus. But the previous reading, obviously, was 1.5%. Now, clearly, we discussed why that was. That was a case of people rushing in to buy all the goods they can before the tariffs kicked in. It makes sense, but it is still showing 0.1%. You can see, look, here on the chart, we bring it up a bit bigger so you can see it. You know, you are beginning to see, slowly but surely, reality is biting. The consumer is beginning to get worried, like I say. And again, it's a question for everybody. Please let me know your opinion. Is this indeed a slow burn? And there's other good news, sort of, but there isn't as well. This is, again, this is underlining my point. We are witnessing a slow burn. Let's start off with the good news first. Walmart, Q1, Walmart, well known for their good value goods, etc. Major, massive retailer in the United States. Their Q1 earnings was announced better than expected. In fact, their revenue for Q1 was announced at $165.61 billion, slightly above. The estimate was $165.59 billion, so slightly above what was anticipated. And their earnings per share, again, a lot better, was announced at 5.17% better than expected. Excellent, yes. However, and this is the point I want to get to, slow burn. However, the company has become the latest of a long line of companies who are avoiding to give second quarter profit guidance due to Donald Trump's tariffs. Now, usually in earnings, not just the revenue we look at, or earnings per share, etc. We look at the earning report. We look at their forward guidance, what they're predicting in the next quarter. Okay, and this is usually standard. Companies usually do this, but there's a long line of companies now, when their earnings are coming out, they are not doing forward guidance. And it gets worse than that. Walmart CEO Doug McMillon, he said this: "We will do our best to keep our prices as low as possible. But given the magnitude of the tariffs, even at reduced levels announced this week," so even at reduced levels with 30% on China for 90 days, so even at reduced levels announced this week, we aren't able to absorb all the pressure given the reality of narrow retail margins. In other words, price hikes are on the horizon. Things are going to become more expensive. Despite the lower tariffs, it's going to come and become more expensive. And I've been talking about this over the last couple of days. And they haven't broadcast about this because despite the good news, 30% of China for 90 days is still expensive. Okay, China and US 10%, 25% on imported cars, except for the UK, which is 10. 25% on automobiles and light cargo trucks. 25% on steel and aluminium from all countries except the UK. And 10% baseline tariff on all countries. And here's the other thing. There was much rejoicement on the 9th of April when Trump said, "I'm going to put a 90-day delay on reciprocal tariffs." But that was on the 9th of April. We're approaching that expiry date. And how many deals have actually been done at the moment? So yes, they say they've got a blueprint for a deal with the UK. It's a blueprint. It's not signed. Okay, but that's encouraging. That's the UK, but the UK is one of the easiest ones to do because they actually have a trade surplus with the US. How many other trade deals have been done? Yes, China and the US have agreed, to have, give each other some breathing room for a little bit, but that still hasn't been done. I know Japan is hoping to try and strike a trade deal next week. How about the EU? That's going to be really sticky. So again, yes, Monday was a really good day for the market. Really exciting. But is this as good as it gets at the moment? It's where the market is trading now. Is this as good as it gets? Because in reality, there is still some really tricky stuff coming. Really tricky stuff. And again, I want to carry on. I don't want to be doom and gloom. That's being encouraged by Jerome Powell, who's all doom and gloom. He's all doom and gloom because he spoke today. And this is what he had to say. He said this: a critical question is how to foster a broader understanding of the uncertainty that the economy generally faces. We may be entering a period of more frequent and potentially more persistent supply shocks. Supply shocks. It will be difficult. It will be a difficult challenge for the economy and for central banks. So again, doom and gloom as well. So again, like I say, is this as good as it gets? Again, it's an open question for everybody to chat to me about, everybody to ask me. Anyway, let's have a quick look at the market first. As I said, we go back to, we'll get a brief look at it, but see where it stands currently at the market at the moment. So obviously the US session has now been open for about 45, just under 45 minutes. I mean, like I say, again, we've had two really good days of gains for the S&P, all on Monday, or technically three really good days of gains. Like I said, we had a beautiful gap open where there's a lot of optimism. Currently trading a little lower today because, like I said, I'm beginning to think the excitement is beginning to wane. Currently down 0.32%. Same with the NASDAQ as well. Don't forget, it had a pretty, boisterous good couple of days because of the tech stocks, which we're going to look at the moment. Currently trading slightly negative 0.48%. Say with the Dow, down 0.29% as well for the day, down 123 points. If we look at the MAX 7 like we always do, Tesla, okay, slightly down today, 2.69%. Meta, slightly in the red as well, 1.32%. Microsoft, slight plus, but not massive. Amazon, down 2.56%. Alphabet down 0.22%. Nvidia, who's had a really good couple of days, has actually started to recover from the year to date. It was, don't forget, it was negative 3% for the year. It's now, after a good couple of days, because of the China news, so it can skip more, sell more chips to China, and obviously certain AI deals happening in the Middle East with Trump doing his tour. It had a really good day over the last couple of days, so it's managed to raise a lot of its losses for the year, but still slightly negative. But today, get lightly in the red, negative 1.41%. So again, this is indeed an open forum, so you can indeed ask questions. You can indeed share your opinions. Like I said, I'm generally want to know, is this as good as it gets at the moment? Is reality that, maybe it's not as bad, but it's still not going to be good. Like I said, I've said a number of videos as well, another broadcast this week, that a number of people have changed their forecasts technically lowered their forecast for US to fall into recession, down to 45% from 50 and 60% lot central investment banks were saying. But so anyway, time to do a currency update. Right. So yeah, let's have a quick look at some of the major currencies as well. Because like I said, we had a strong dollar over the last couple of days. Yesterday, it started to run out of steam. Obviously, we all know we're going to look at gold as well, because I want to talk about gold in particular. Well, the euro, for example, okay, it's very sideways. We look at the bigger picture of the euro, though, it is slightly up for the day. It did basically recovered from that dollar bull run, which we had on the Monday. So trending slightly higher, 111, 1.11. Same with the sterling. In fact, the UK actually has some good news as well. On a side note, hasn't had a massive boost to it because the market is thinking of the future. But UK GDP came in better than expected, 0.7% today. So again, gave it a bit of a boost. But everybody knows for tariffs and the expected tax increases is going to have an impact. So at the moment, bit tepid because they know what's coming. Same with the dollar yen as well. Dollar slightly lower again, dollar. After that really good day, when the market got excited, we are seeing a weaker dollar. And you see that with the dollar index as well. Now back to 100. It was trading around 101 with all the excitement a few days ago. Now it's back to 100. So yeah. And of course, we're going to talk about gold. So I want to talk about it. I always talk about gold in all my broadcasts, obviously, because I love gold. I get really excited about it. Gold has been under pressure. There's no doubt about it. It has been under pressure because A, for one, stronger dollar. B, everybody is, being happier. So the safe haven status has disappeared. However, as you can see today, it tested that key area there around $3,115 potential area of support, and it has managed to bounce up off that trend line. The only thing which I am keeping an eye on, because I'm always been a gold bull. I always have been. It's been my first asset ever traded. It's my first love, as you know when I talk about this in the program. We have seen a bit of a double top here, though, which technically speaking does potentially indicate that maybe, just maybe, the bears are beginning to drive gold, because gold has been on a hell of a really, really, really big bull run. So just maybe, like I say, it might be the sign of the bears. But again, in my opinion, it's all depending on the fundamentals. Like I say, is this as good as we get at the moment with the market? Like I say, this little break we've had, so obviously changed the momentum or the enthusiasm for the yellow metal. But like I say, are we slightly kidding ourselves that everything is great? But anyways, interesting watch. It's still, like I say, that level's held for the time being, so it's worth keeping an eye on. But it's also worth bearing in mind we have seen a double top here. So need to keep an eye on my precious metal. Don't forget, of course, this is a live broadcast. So you can talk to me anytime you want, ask me questions, etc. But like I say, more important, what I really want to hear is your opinions. Excuse me. What you think, Do you think this is as good as we get? Or do you think we're going to, see more light at the end of the tunnel? What do you think about gold? Is gold's bull run finished? So do let me know. As well as that, if you're watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live, which is practically every single day. And if you like this sort of content and you put up with me, give me one of these. It's nice to know that you like what we do. And as well as that, the other thing I want to mention, I've noticed a lot of people watch the recordings afterwards. They miss the live shows and they go back and watch the recordings of the broadcast, which is great. I love that. Thank you for the support. What I would say is, if you are watching the recordings and you have a question or you want to make a statement, put it in the comment section below. I will see it and I will reply to the comment next time I go live on air, which of course will be tomorrow. On another point I want to make, if you're not part of the OneRoyal family and you want to know more, go into the description and there's a little link to find out a bit more about us. Anyway, if there is no questions, not a problem. Don't forget, I'll be back again tomorrow. So it leaves me to say, till next time. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand for entering any trade. Till next time, every single one of you, trade safe.